Hello everyone. Every week I share my analysis regarding Nifty Bank Nifty and the various sectoral indices. This week also I'll do the same, and I hope these videos are adding value to your analysis as well. Let me know with your comments in the comment section below in the YouTube. Well, this video is going to be super duper interesting because one of the sectors which was outperforming previously, I think it is showing signs that it is getting tired on the upside. It could come down, probably it could consolidate if not correct. And there are 2 to 3 sectors which are showing signs of, probably coming out of their weakness zones. I'll share everything. Let's start this video. First, we'll talk about Nifty with the weekly time frame chart on my right hand side and the daily on my left hand side. So in terms of trend, in the weekly time frame chart, things are fine. I mean, the moving averages, RSI is fine. But there are a couple of candles in the last 2 weeks which are unsettling. Talking about these candles, if you just watch my previous video on my YouTube channel, I clearly mentioned that overall trend is up in Nifty, but market needs to come down a little bit. The risk reward ratio should improve because the problem was that Nifty was at a much higher place and the moving averages were slightly lower. That was one thing. And second thing was this Fibonacci extension, which you can see over here right now, which is 26,100. So 26,100 is acting as a short-term Fibonacci extension, which is providing short-term resistance to the market. Now, in terms of trend, it may be positive, but the momentum is getting weaker in the daily time frame charts. Obviously, now as a trader, I would like to know where are the immediate supports. The immediate supports, according to me, is somewhere around this zone. You can see this is the previous high, and generally this previous high can act as a decent support. Not a very strong one, but it can. 25,660, 650, and the next support is somewhere around 25,530, 500. All right. So these are important support zones where Nifty might see some sort of buying coming in, but always remember that no one knows how deep the pullback can be. At times it can be pretty deeper also. So just for understanding, this is a support. What needs to happen is market needs to come down and start going up. If it just trades at support and if you try to buy somewhere over here, it is not the right way to do it, because at times market gives a shallow pullback and at times market gives a deeper pullback. Okay. And there is one more reason why markets are coming down, and that is dollar index. Dollar index recently, if you can check in the weekly time frame chart, suddenly the prices are trading above the weekly moving averages. The displacement, although it's not right, but still the prices are performing nicely because the momentum is pretty much positive. Even over here, we can see price went up, it gave a pullback, now it's trying to go higher. So basically things are improving in the dollar index world. Things are getting better and better. Overall, it is a weaker chart. I know that. Even in the monthly time frame chart, it's just a weak chart. But whenever dollar index goes up, it gives trouble to the Nifty. So I think as a trader in the Indian markets, what we need is just a shallow pullback and then, resuming the uptrend. I think time will tell in the next week. Bank Nifty. Well, Bank Nifty, one of the strongest sectors right now in terms of trend. Things are positive. Momentum super duper positive. Couple of candles which are not that great, and the reason for that is negative classical divergence, NCD. You can see that Bank Nifty has made a higher high in price and lower high in RSI. We can see this high in the RSI also broken. So due to this, a short-term top is in place. Immediate support is around 57,550. This is an immediate support. Hopefully this should hold on because there is a previous high over here. In case if this does not hold on and Bank Nifty decides that it wants to go slightly deeper, then the next support I think will be within the range of 56,887 and 57,045 of 50. All right. Going ahead with the private banking space. Well, private banking space in terms of trend, it's pretty much positive. It's great. In terms of momentum is also fine. The couple of candles which are visible over here are very bearish because this is a gravestone doji, which is not a good candle, and this is a red candle, which is again not a good sign. If you convert this particular chart into a line chart, do we get anything from here? No. This is not a negative divergence, but yes, you can see some sort of profit booking coming in the private banking space. Again, as a trader, when things come down, you would like to find support. I think immediate support for private banking space is somewhere around 27,880, 884. All right. PSU banking space. PSU banking space, one of the sectors, despite multiple negative divergences in the daily time frame chart, it has continued to move on. Multiple times I told that there is a negative divergence, it needs to come down, but it did not listen. This is a classical sign of a roaring bull market in a particular sector. Generally, it happens that in very strong bull markets where momentum is very, very strong, at times the negative divergences are taken for a toss. In fact, I even shared this in one of my videos recently when I was talking about RSI. I made, in fact, 2 videos on RSI recently. So this happens at times and it is okay. So what to do if you're trading in PSU banks and if you're holding since lower levels? If you're holding from lower levels, it makes sense to hold them with a trailing stop loss. And if someone asks me that, is this a good time to initiate a new trade? I would say no. Because generally when prices are pretty much far away from the moving averages, the risk is very, very high. Also considering RSI in the weekly time frame chart has entered 70. So yes, you can continue to hold your older long positions, but initiating new ones over here would not be great. Energy pack, one of the recently outperforming sectors. Why I'm saying recently? See, I'll just go back to the PSU banking space. This is what I meant. This is, went through hell of a lot of rally. And if you check energy pack, it's just trying to, start its up move. This is because of Reliance, I understand. But as a sectoral chart, it looks good. As a sectoral chart, in terms of trend, momentum in the weekly and in the daily time frame charts, everything is fine in this sector. Okay. Auto pack. Now here I want to say something. I have been saying since I think 1 or 2 weeks that auto pack needs consolidation. Auto pack is tired. Over here, yes, it took support somewhere over here, but now I think it's getting tired. In case in the auto pack, if I just drop in a Fibonacci retracement, if it start trading below this low, which is 61.80% retracement, if it starts trading below this low, closes below this and sustains, then one can expect short-term weakness in the auto pack. And if you are a trader holding long positions in the auto pack, it would make sense to trail your stop losses aggressively and obey them. Okay. Consumer durables. Now, this is one sector I believe is trying very, very hard to, get out of the consolidation phase. Basically, you can see over here, it's trying to move up ahead. Again, 2 weeks of sideways movement. Again, RSI sideways movement. The last 3 weeks, in fact, the last 4 weeks were better. Things were starting to improve, but once again, due to the last week's move, again, I would say trend is fine, trend is up, but there is no momentum in the sector, and the sector is trying to go sideways, and if not sideways, then retrace. So overall, I would like to stay away from the sector as of now. If the trend and momentum both, get positive, only then we will go ahead with the sector. Now the next sector is going to be consumption pack. Okay, so consumption pack looks positive, but it should not break support. Why I'm saying this is I'll just go to the weekly time frame chart. I'll convert this weekly time frame chart into a line chart. Now, what can we see over here? It's a clear-cut NCD, negative classical divergence. Not a good sign. So, last week it was looking pretty great. Last week, if you just go and check my last week's video, it was looking pretty great. This was one candle which was unsettling. And I clearly mentioned that this one candle is okay, but we need probably a little bit more price action for us to, confirm something is wrong or right. And even this week, things are not looking great. So I would say that things are a little bit worrisome. In terms of support, this is the support over here. If this support is broken, especially 12,300, I would just like to drop this thing for me and for you, 12,300. This is a support band. If this is broken on closing basis, then I think some sort of selling pressure will be aggravating in this particular sector. Okay. Finance pack. Finance pack is positive. The trend is up, no problem. Momentum is fine, no problem. And even in terms of price, things are fine. Yes, there is short-term weakness. I would agree, because you can see that there is a negative divergence in the daily time frame chart. We have a higher high in price, lower high in RSI. But if the higher time frame chart, the weekly time frame chart is positive, then the short-term negativity is okay. In fact, it's fine, because after every rally, we need some sort of pullback, and after the pullback, things can improve. So as far as the longer term time frame chart is fine, shorter term time frame charts being weaker for short term is okay. FMCG pack. FMCG pack, it's trying its bit to improve. I would say that it has given us almost 3 candles positive, and then suddenly couple of candles which are putting a big question mark that, do you know where I'm going to go? That's what the sector is trying to tell us. RSI pretty much flat. A pullback on the upside, a retracement, and then a consolidation. So again, a question mark. If you just have a look at the constituents of the FMCG pack, you will see 1 or 2 stocks outperforming, few underperforming. So I think it will be very difficult to say where this sector is trying to move, because overall, if you see, you might feel hopeful, okay, it's gone up, it has come down, it might go up. I'm using the word might. But we don't have any significant indication on the chart which says that things might improve, because overall the range still continues. So I think it would be better to avoid. But now this is the second sector, first sector I would say, which is trying a bit to come out of its extreme hibernation or consolidation. The reason for that is, I would tell you, first candle hammer, second candle hammer, third candle again positive big green candle with a very big wick on the upside. So 3 candles consecutively, which is pretty much positive. Then we have a high wave candle. Then again we have a high wave candle. All right. Now high wave candles generally coming at a place where it's a resistance. It shows that the market is overstretched on the upside. So for that we need to check the daily time frame chart. If we check the daily time frame chart, is it a resistance? The answer is yes, it was a resistance over here. Now if we go back to the daily time frame chart, and if you check over here, there are 2 things which is visible to me. I'll show it to you. Number one is, even in this consolidation, you can see 1 candle positive hammer. This is also a hammer. This is a big green candle, and all this positivity is coming up at a time when there is positive divergence visible in the FMCG pack. And this is a triple positive divergence. This is not a normal. Overall, if you look at it, overall, just plain chart, it will look sideways. But if you try to see a little bit with more curiosity, you will find out that there are 3 back-to-back lower lows, and there are 3 back-to-back higher lows in RSI. So this is a good sign for sure. It's trying its best to come out of its hibernation, its consolidation. Will it be successful or not? I think for that we will need a little bit more evidence from the price itself in the next week. So we'll have to wait. IT pack again, I would say that in the weekly time frame chart, trend is trying to, the momentum is trying to improve. Trend is still negative. Even in the daily time frame chart, I would say this is just a mere pullback, because if you have a look at the constituents of the IT pack, you will see that the mid-cap IT stocks are performing, but the large-cap IT stocks are still laggards. They're still weaker, possibly in a downtrend or consolidating. So as an index, okay, as an index chart, I would say this index chart will only improve if the large cap IT stocks start to outperform. Otherwise, it's not going to happen. Only mid cap IT stocks performing is not going to take the IT sector on the upside. So that is what we need to understand. Metal pack continues to outperform. Strong uptrend in the daily time frame chart. And even the momentum is fine in the daily time frame chart. Strong momentum in weekly time frame chart. Strong trend in the daily time frame chart. Only thing is that the last couple of days were unsettling. We had some profit booking coming here, even a wick in the weekly time frame chart, and that is happening possibly because there was a sudden up move in the weekly daily time frame chart, which was a one-way uptrend. So as a short-term trader, extreme short-term trader who trades for 4-5 days, it would make sense to book partial profits aggressively and then wait with your trailing stop losses. Infra pack, strong uptrend, strong momentum, but there is a lot of space between the price and the moving averages, so be slightly careful. At this juncture, if you ask me that should we go long in the infrastructure stocks or this particular sector, I would say a big fat no. Makes sense to wait out on the sidelines and then probably participate. Just see where the price is. Just see where the moving averages are. A lot of difference, and this has been a vertical rally. Such rallies, generally they don't sustain. Every rally needs a retracement, and only then you will see a full-fledged bull run going up ahead. So makes sense to hold your long positions for sure. I'm not saying book out and get out, but be sure that you are trailing your stop losses pretty much aggressively. Now, Pharma pack. Pharma pack is the second sector after the FMCG pack, which is trying its bit to get out of the sideways zone. First candle positive, second candle positive, third candle positive. Okay. And then there are two negative candles. Now, when these two negative candles did happen in the weekly time frame charts, if I switch to the daily time frame chart, and if we check here, recently what has happened is that the price went up, it retraced, but at this retracement, there is something interesting. One candle which is hammer, second candle which is hammer, and then we have a smaller candle over here. So this is not an aggressive selling. This is something like consolidation. Patterns like, trend is up, I'm consolidating, volatility is crashing, and after that, we might take a U-turn. It can happen. I'm not saying it will. It can happen, because in the pharma pack, you will see that few of the stocks have started outperforming. Few of the stocks are underperforming. Large caps are not outperforming so much. They are, but not that much. So I think everything will depend on couple of stocks in terms of weightage. If they go up, if they start performing very nicely, then we do have a chance in the pharma pack. And in terms of support, 22,000 is the support and 21,850. If these two supports are broken, once again, you will see pharma pack going down the drain. So let's wait for a week and then we'll find out. PSE sector pretty much positive, trend positive, momentum positive, and even in the daily and weekly both in terms of trend and momentum, no problem. Things are fine over here. Realty pack is the third sector. Realty pack, if you remember, I think I told 3 weeks back that we are taking a U-turn in the realty sector. if we traded above 900 or 920, I don't remember, not 920, probably above this weekly high, if we started to trade, then things would turn positive. Maybe 910 was also a resistance, and from there things have improved. Now, if you have a look over here, displacement of moving averages not that good, RSI improving, which means no uptrend in terms of displacement of moving averages, but the momentum is improving in the weekly time frame chart. Daily time frame chart seems to be better, even the momentum seems to be better. What we need is either a full-fledged rally on the upside with high momentum, or else it dips, comes at the support, and then it goes up. Either of these two scenarios will lead to outperformance in the Realty Bank. India Defense. India Defense, again, as a sector, I would say trend up, momentum fine, okay. In terms of price, you will not see major breakouts, but still, as compared to other sectors which are underperforming, India Defense sector is much better. Only problem is that it doesn't have that much of weightage in Nifty. That is the reason it doesn't move, when Nifty is moving on the upside. It is a laggard recently, but overall things are okay. Midcaps outperforming in terms of weekly time frame chart, outperforming. Weekly RSI momentum is fine. Daily time frame chart momentum is fine. Even the RSI is fine. So overall, I would say this is a market which is in a strong uptrend, with caveats that dollar index is improving, which I shared with you, which is not a good sign for Indian markets. Now, what we need to understand is that this particular rally, this rally has happened on the back not just of couple of sectors or 2-3 sectors, but there have been few other sectors like private banking space which have tried to lift the markets higher. Now even real estate is trying to come up. FMCG is trying a little bit. Pharma sector is trying a little bit. Okay, so things are okay, things are fine, nothing is bad. But what we need to understand is, if a dollar index is going up, we need to be a little bit careful. And what we need to see is, does Nifty, after coming down, does it hold the supports or not? If it holds the support and then it tries to bounce back, things are okay. If this is broken, if important supports are broken, then it may lead to a problem. All right, let's hope for best and trade less, trade wisely. In the next 1 week or 2 weeks are going to be very, very important. Be patient. Don't jump on to quick trades right now. This is not the time to jump on to quick trades. In fact, if you're holding long positions, it will make sense to trail your stop losses pretty tightly. Take care, guys.